Hello folks, so today I want to talk about SoundHound. Since my last video, SoundHound has gotten crushed a little bit, but on Friday we got some positive news in the form of a great earnings report from the company, and that's what I want to focus on today. I'll also go over where I think SoundHound may be headed from here on out, and stick around to the end because I'll give you my thoughts on the broader market and if the bull market is finished or not. Before we begin, this isn't financial advice and it's for entertainment purposes only. Alright, so SoundHound released its Q4 earnings report on Friday, beating on both the top and bottom line numbers. So fourth quarter revenue was $34.5 million, an increase of 101% year over year, which beat expectations of $33.7 million, and SoundHound also beat on earnings, posting a lower than expected loss of an adjusted 4 cents per share versus 10 cents per share expected. On top of that, management upgraded its 2025 revenue outlook to 157 to 177 mil, which is slightly above expectations as well. SoundHound had a breakthrough year according to CEO Kevin Mahaja, expanding its leadership position in voice and conversational AI through major customer wins, expanded partnerships, groundbreaking generative AI innovation, and strategic acquisitions. And he goes on to say the focus of the future is agentic AI, which is basically AI that does stuff for you. For example, let's say you wanted to have hamburgers for dinner. Well, through agentic AI, you'll be able to order it from the comfort of your car while you're driving home without even having to contact the restaurant directly. Clearly, there is tremendous potential here, and 2025 is looking quite exciting indeed. Going forward though, 2025 will be a year of reckoning for SoundHound. The company now needs to show continued momentum when it comes to customer acquisitions and rolling out its third pillar, otherwise known as voice commerce. Agentic AI will be crucial to pulling this off, so the company needs to walk the talk this year and start making money from this pillar sometime soon. I mean, if we look at the sharp retracement in Sound's valuation over the past few months, it looks like the market is either getting a little bit impatient or unhappy with the sky-high valuation. Probably a combination of both. I mean, even with the retracement, SoundHound is still trading at a price to sales ratio of more than 50. That makes it an overvalued stock by any metric, so investors need to be mindful of that. Now let's move on to the chart. After running up to $25 in December, SoundHound has since sharply retraced down to the 10s. It's not ideal, but on the plus side, the price has found support at the crucial 40-week exponential moving average circled here, which bodes well for the stock going forward, as long as it holds it, of course. As to my outlook for the stock, if the price does hold above the 40-week EMA going forward, I wouldn't be surprised to see some sort of a relief rally back up to the mid-teens and above the 10-week EMA circled here. I really want to see SoundHound get back above the 10-week EMA for me to believe in its recovery. Of course, if the price violates the 40-week EMA in any meaningful way, who knows how much lower the stock could go. In my opinion, I think SoundHound is likely to undergo a period of consolidation over the next few months, much like it did in the middle of last year. Anyway, do you still hold SoundHound? Let me know in the comments below. Alright, moving on to the state of the markets as a whole. If we look at the big indexes like the triple Qs and SPY, they still look okay, but the Russell 2000 index is getting hammered, as we can see with the IWM ETF here. In fact, the Russell 2000 is below the 40-week EMA, which is quite a negative sign. That explains why small caps like SoundHound have struggled recently. But what about the market going forward? Where is it headed? In my opinion, as long as key macroeconomic indicators like unemployment and inflation don't go haywire, I don't really see things getting much worse from here. Of course, this isn't financial advice and I could be dead wrong, so take that with a grain of salt. On Friday, we got some decent inflation data which came in slightly below expectations. This means that inflation for now is staying somewhat steady, which is good for equities because it means the Fed won't be in as much of a rush to cut rates. Next week we have the ISM manufacturing PMI coming out. Now Tom Lee has talked about this recently and for good reason. When this measure bottoms out and starts rising above 50, it's usually pretty good for stocks. So I want to see this measure get above consensus expectations of just below 51 next week. So if we get anything above that, we'll probably get a positive reaction from the market. Alright, before we wrap up, I want to quickly go over some stocks that are actually showing strength amidst the sea of red. The first stock is Dutch Bros. I've talked about the stock in the past, and late last year it broke out of a base and has since been looking strong. As you can see, the price is still above the 10-week EMA, which suggests short-term momentum is still to the upside. The company reported Q4 earnings a couple of weeks ago, and they were pretty decent. If the stock keeps going the way it is, I don't see why it can't get to triple digits in the next few months. Again, it's just my opinion and anything can happen. Another stock that looks strong right now is Alibaba. Now last year I made quite a few videos on this, and finally after the release of DeepSeek a few months ago, it looks like it's undergoing a stunning rally, just setting new 52-week highs 2 weeks ago. Alibaba doesn't actually own DeepSeek, but it does offer its models on its cloud platform, and there are rumors swirling that it's going to invest in the startup that created DeepSeek. Whatever happens, recent events have shown that Chinese AI is to be taken quite seriously, and Alibaba is right in the thick of it. The market is probably anticipating some sort of benefit to Alibaba's cloud business as a result of this, and the stock is rising accordingly. However, I wouldn't be surprised to see the stock retrace sometime soon after the rapid rally over the past few weeks. In the medium to long term though, as long as the AI train keeps chugging along, Alibaba should be a strong beneficiary. Let me know in the comments below what you think about Alibaba. Alright, I'm going to leave it there folks. Historically, February has been a down month on average for stocks, so I'm glad that we're turning the page on it and moving on to March, which has historically shown positive returns on average. So here's to a green month ahead for all. If you haven't already, please hit the like and subscribe button for more videos like this. And if you want a monthly list of top momentum stocks, please join the Discord community, link in the description below. Alright, thanks for your support, thanks for watching, and see you guys next time.